Jai Hind students, today we are going to discuss Unit 4 Government Budget and the Economy chapter. It's part 1 video. So before we start the video, I have to tell something that this chapter is having questions in the board exam of 6 marks like money and banking chapter. So let's start. What is the government budget? So, government budget is a statement of expected receipts and expected expenditure of the government for a fiscal year. That is, in an financial year, how much amount is expected as receipts or the amount received to the government, and the expected expenditure, how much amount is given out of the government as expenditure. That account is known as what? Government budget. So last day of month of February is well known in India as the day of finance minister present annual budget of the government. So let's see certain objectives of government budget. So objectives of government budget are: first one, managing public enterprises. So there are large number of public sector industries which are established and managed of social welfare of the people. Budget is prepared with the objective of making various provisions of managing such enterprises and providing them financial help. However, is case of public sector enterprises are showing inefficiency and losses. So the government may plan their privatization. So this is the managing public enterprise means what? The social welfare of the people is the main motive of the government. So which and all area the government is seeing that it is not developed, they are taking initiatives and they are making it developed. And also it may have a loss to the government sector, and if any situations government is not able to solve the problems by directly, they will appoint any agency or they will make the plan to be privatization. So that's known as managing public enterprises. So next is economic stability. The main objective of government is to bring stability in the economy. It controls fluctuations in general price level through taxes, subsidies and government expenditure. For example, when there is inflation, continuous rise in price, government can reduce its expenditure when there is deflation, continuous fall in price. So government can reduce taxes and grant subsidies to encourage spending by the people. So this is the two cases, that is when there is inflation, that is continuous rise in prices, government can reduce its expenditure, and when there is deflation or continuous fall in prices, government can reduce taxes and grant subsidies to encourage spending by people. So in this situation, inflation means what? The high rate of money flow in the economy. So how the government is making it stable? By reducing its expenditure. So government can reduce its expenditure. So when there is deflation or the money fall in the prices or the money flow is decreasing, so the government can reduce their taxes and grant subsidies to encourage spending by the people. Third objective is redistribution of income and wealth. So it means reduce the inequalities between income and wealth. Through the policy, government policy seeks to promote equity. To increase the disposable income of poor, government provide them subsidies. To decrease the disposable income of richer section, tax system is made progressive. So, putting greater burden on the richer section of the society. These reflected in government budget by the way of tax, revenue, and welfare expenditure. So, this is said that government, the wealth that has been not distributed equally, or the wealth that has been stored with the richer sections of the people, government will implement taxes to them. So as a result, the taxes has to be paid by the richer section. So the money can be seeked from them to the government by imposing taxes. And to correct this situation of poorer sections of the society, they will grant subsidies, or they will make the cost of the goods more cheaper, so that they can buy the goods, so that may rise the redistribution of income and wealth. So this may affect, or this may be made equity in the economy. So next final objective is allocation of resources. Through the budgetary policy, government aims to reallocate resources in accordance with the profit maximization and social welfare. And government can influence allocation of resources through taxation and subsidies policy to encourage investment for government, and can give tax concessions and subsidies etc. to the producers. It can also discourage the production of harmful consumption like liquor, BD, cigarette, tobacco etc. through heavy taxation, and encourages the use of khadi products by the way of subsidies. So unlike the private sector, government also have an aim of profit maximization as well as in the same way social welfare of the people. So which of the products that has to get encouragement, like khadi products, should be encouraged by the government by implementing subsidies to the products, and those goods which needs discouraging in the public sector, so that have been what taxes have been hired in those products like liquor, BD, cigarette, tobacco etc., which is harmful to the society, and so that they can discourage the consumption of the product by the consumers. So these are the objectives given in your textbook. First is reducing inequalities in income and wealth, then reallocation of resources, then economic stability, then direct participation and economic growth by managing public sector enterprises, then economic growth of the economy. So these points I had just discussed in elaborate. So in this direct participation and economic growth by managing public enterprises means the government seeks to accelerate the pace of growth by establishing public sector enterprises. The budgetary policy of the government targets to increase the rate of growth through public enterprises. Then often public sector enterprises are encouraged in areas where private monopolies occur. So these are the areas where the government has looking for, that is in which area they need, that is the monopoly of private sector is there, the public sector has been implemented, and the growth has been assessed. That is private monopoly means in a particular sector sometimes the private sector ownership firm may be leading the role. So in that sector the people may have a certain difficulties. So in that conditions the public sector interferes, and they also establish the same enterprise as the private sector has been what has been made, and they will get development in the area. That is known as direct participation and the economic growth by managing public sector enterprises. So next is growth of economy. Government through its fiscal policy targets to inject sufficient resources by encouraging savings and investment. This will further enhance the capital formation and level of production, causing rise in national income and economic growth. So here then the it's a fiscal policy measure. When we talk about government budget, so it's a fiscal policy measure. So government through its measures injects sufficient resources in the economy by encouraging savings and investment. So this will further enhance the capital formation, that's development of new industries and level of production, causing rise in the national income and growth. So these are the main objectives that can be implemented by the government budget. These by looking into these aspects, the budget has been set. So in some textbooks, the employment generation is also as an objective of this government budget. If in your textbook that is also there, you can study that also. So hope you understood everything. If you have any doubts, please ask me.
Thank you, students.